All right. We are live. I can see the attendees are joining us. Let's take a few seconds to make sure everyone is joining us. Okay. We're at 38 now. All right, let me start. So, good morning for people in DC. Good afternoon for people here in Cairo, and across the world. We have people joining us from Europe and Africa. So welcome to everyone. It's a real honor to host the Cairo Center for African Studies first webinar in 2021 on a very, very important topic. The title of this webinar is titled Assessing the Economic Impact of COVID-19 and Policy Responses in Africa. I'm very, very excited to have a very distinguished panel. I will introduce everyone before they speak. Yes, I sent to everyone an agenda. So yes, to remind everyone, we'll give an opportunity to each panelist to give some opening remarks. And then after each panelist has spoken, we'll open up for a discussion. I have, of course, some questions, and we'll also give the opportunity for attendees to submit questions. For attendees, you have a button at the lower part of your screen where you can submit your question, and then I will try to take as many questions as we can, depending on our time, because our speakers have a very busy schedule. So I don't want to keep talking anymore, and I think we'll start immediately with Dr. Marina Wes. Let me introduce her briefly. She was appointed country director for Egypt, Yemen, and Djibouti effective January 1st, 2019. Prior to this assignment, she was the country director for West Bank and Gaza, where she has also served at the World Bank as the country manager for Poland and the lead economist for Turkey. Dr. Marina, the floor is yours. And then we'll go to Dr. Saeed and then Dr. Elina.
Thank you very much, and many thanks for the invitation to speak in this panel today. It's my honor and privilege to be part of it. So good afternoon, and it's getting a little bit late, but still a happy new year to everybody. I think we're all hoping that 21 will be a better year than 2020 was. Although many countries around the world are off to a very rough start with record COVID infections, renewed lockdowns, and new variants of the virus. And I think that will probably also impact our discussion today. Of course, there's also good news on the vaccine front, although questions remain about the speed and the scope of the rollout of vaccines around the world, including in lower income countries. So where does this leave us? And I will try to keep my opening remarks quite succinct. About 2 weeks ago, the World Bank released its latest global economic prospects, which estimated that globally in 2020, GDP shrunk by 4.3%. That's a pretty significant amount, and it's going to take a prolonged period of time to get back to the pre-pandemic growth trends. For this year, globally, our forecast is that we will hopefully reach 4%, but risks are very much on the downside. The global rebound in 2021 is also expected to be uneven, with stronger rebounds in some economies like China, whereas we also see many countries struggling with the pandemic's lingering effects, including many countries in Africa. So let me turn to sub-Saharan Africa. Rates of infection have actually not been as high as in other regions, at least to the best of our knowledge. But the economic consequences of the COVID-19 pandemic in Africa have been severe. Africa is a region, I think many of the audience members know that, characterized by mostly weak health system and very large informal sectors. So government policies are sometimes harder to target informal sectors. The pandemic has taken a large toll on economic activity in sub-Saharan Africa, putting a decade of hard-won economic progress at risk. Output in sub-Saharan Africa contracted by an estimated 3.7% in 2020. And I want to emphasize that this is a per capita income decline of more than 6%. This is the deepest contraction on record. The hardest hit countries were those with large domestic COVID outbreaks, those heavily dependent on travel and tourism, and also those countries that are commodity exporters, particularly of oil. So going forward, what does 2021 look like? And of course, there's a lot of uncertainty. But what the Global Economic Prospects forecasts is that 21 GDP growth for sub-Saharan Africa will be 2.7%, which amounts to a 0.2% decline on a GDP per capita basis. Now, this extrapolating, this suggests that at the end of 2021, average living standards in sub-Saharan Africa will be set back by a decade. Tens of millions of people in the region are likely to be pushed into extreme poverty, with particularly severe setbacks in a number of countries, including Nigeria and South Africa, which are home to a quarter of the region's population. COVID-19 will also set back progress in building human capital, including because of school closures. And the COVID crisis is disproportionately affecting girls and women who are often informally employed and the main caregivers. And one trend of some concern is that lockdowns around the world have seen sharp increases in gender-based violence. Now, getting back on track will require decisive action and a lot of global collaboration to try to deal with the world's most pressing long-term challenges, including the elimination of poverty and also tackling climate change. Right now, we have an opportunity to support inclusive and sustainable growth, to safeguard health and education, to prioritize investment, including in digital technologies, and to improve governance and enhance debt transparency. I want to close by saying a few words about Egypt, a country many of us are in right now. And Egypt's macroeconomy has so far shown relative resilience in the face of the COVID-19 shocks, with average real GDP growth remaining positive. And this resilience has been supported by the macroeconomic stabilization efforts and the energy sector reforms that have been implemented in recent years. Like many other countries, Egypt is undertaking proactive emergency measures in response to the COVID-19 crisis. But nevertheless, we see a dampening of growth and incomes in Egypt too, undermining foreign income sources, disrupting fiscal consolidation, and exacerbating some of Egypt's long-term structural challenges. We are particularly concerned that the recent downtick in the poverty rate in Egypt may be reversed due to the impact of the COVID-19 crisis on households' incomes, and also through the transfers coming from Egyptian workers abroad. The COVID crisis, unfortunately, has also led to a further decrease in female participation in the labor market, which we hope can be reversed going forward. So this is very much the moment for Egypt to make advances on a new second wave of reforms to preserve the macro fiscal gains to date and to ensure more inclusive and sustainable private sector driven growth and job creation going forward. So such a second wave of reform would focus on, as I mentioned, sustaining macro stability, but also building human capital through more and better spending on health and education, and encouraging a more dynamic and competitive private sector that can expand exports and create more jobs in a climate-friendly way. Now, I want to end this initial round of remarks on a positive note, and I actually truly believe in this. The current crisis can also provide opportunities, and I think we have to proactively work towards those. For instance, the crisis can encourage the adoption of new technologies to mitigate the economic impact of social distancing measures. It can improve education and financial development in countries with reliable and widespread internet access. And in many sectors, agribusiness is one of them, the domestic supply chain could be strengthened and export capacity can be enhanced by removing trade barriers and distortions. And also in the context of the overall theme of the seminar today, I think this is a really good time to put on the table the agenda of regional integration. MENA, North Africa, and many other parts of Africa remain among the least integrated regions in the world. And I think this is a really good moment to rethink policies to strengthen trade integration. Leveraging the regional trade agenda can enable domestic reforms and stimulate job creation and also support inclusive economic growth through stronger regional value chains. More international quality investments can be attracted in that way, and stronger regional digital connectivity can lead to resilience and private sector job creation throughout the region. In the case of Egypt, for instance, there's some potential as a manufacturing hub for North and East Africa, including right now in the context of medicine and vaccines. So regional and global cooperation is very important at this juncture. I'm going to stop there. I hope that these opening comments give some pointers for our discussion on Egypt and on Africa. Thanks again. I really look forward to hearing what the other panelists have to say and to the discussion.
Thank you, Dr. Marina. Very insightful opening comments, and I like the positive note at the end about opportunities. And I think there are a lot of things that we can unpack a little bit more when we open it up to discussion. So thank you very much. I'll move on to our second panelist, Dr. Saeed, who is the IMF Senior Resident Representative in Egypt. Before assuming his position, he was Mission Chief for Chad and Deputy Division Chief in the African Department, where he covered Central African regional economic issues. Prior to that, he was the Deputy Division Chief in the Debt Policy Division in the Strategy, Policy and Review Department of the IMF. It's a great honor to have you, Dr. Saeed, and really looking forward to your opening remarks.
Thank you very much, Dr. Adel. Pleasure to virtually meet you. I look forward to meeting you in person, given that I am in Cairo.
Hopefully soon.
Hopefully soon. And great to see, of course, Marina, always a pleasure to see you. And Elina, it's been many, many years, so nice to see you even in video. So great opportunity, Dr. Adel, to exchange views on this very important topic. You know, I think Egypt is a great example of how to deal with the crisis, but also on how to address challenges that are looming. So very much my talk today will be focused on Egypt from that point of view. And I think I would like to share two key messages that I think are useful for the debate on crisis management and more broadly on reforms. One is that Egypt's effective response to the COVID crisis can be traced back to the far-reaching reforms implemented in the years preceding the COVID crisis. These are points that Marina spoke briefly about. So because of these reforms, Egypt experienced remarkable improvement in macro performance. Obviously, these reforms were difficult at the time, but I think they have been critical in strengthening the Egyptian economy, improving its resilience, and allowing it over the past several months to respond to the COVID crisis. It gave the Egyptian authorities the ability and the space to respond to the crisis. And second, and this is more forward-looking, very much in line with what Marina mentioned, I think deepening reforms, especially structural reforms, is absolutely necessary for Egypt to be able to be prepared to tackle the looming challenges going forward. And I'll say a few words about these things. The objective here is really to find a way to improve Egypt's growth potential that can generate jobs. So let me highlight briefly the kind of turnaround in economic performance that happened in the years preceding the COVID crisis. This turnaround was anchored on very strong adjustment and reforms that led to improvements across the board on the fiscal side, the external side, but also growth, as was mentioned. On the fiscal side, we've seen serious reforms, especially, I think, the energy subsidy reforms. As a result of that, Egypt saw primary surpluses that reached 2% of GDP. This is, I think, first ever for Egypt, and that declined in a quite an impressive manner, 20 percentage points of GDP. Now, of course, this allowed the government to be a lot more nimble and flexible in setting the fiscal stance and implementing fiscal policy, and it allowed it to also expand the coverage of social protection during this period. On the external side, we've seen foreign exchange in Egypt build up nicely and reach the levels that are quite healthy of over 40 billion US dollars. This was on the back of prudent monetary policies, but also a move towards a more flexible exchange rate regime. Of course, given that these imbalances were unwound during this period, we've seen growth improve, unemployment decline, etc. And even inflation, after peaking at I think it was maybe 30%, we've seen inflation go down significantly, and now it's below the CBE target. Now, moving to COVID, Egypt was, like many other, pretty much every country in the world, affected in serious ways. Tourism stopped, lockdown measures led to a sharp decline in domestic activity, and we've seen a big outflow of capital from Egypt. Now, what makes Egypt special, and this is the point of this part of my talk, is that the effect of the crisis was contained a lot better than expected. Many observers expected, and certainly better than what we've seen in other countries. And this was because of the proactive and targeted approach to crisis management. I think, as I mentioned, the reforms of the past few years allowed Egypt healthy policy space, fiscal, external, and financial, to implement counter-cyclical support initiatives to help counter the effect of the crisis, protect the vulnerable and businesses. There were many initiatives really targeted, including to help businesses, but also to help employment. I'm not going to spend too much time on that here, but there was a lot of that on the side of the government, but also on the side of the central bank, in addition to the decline or the easing of the monetary stance and the other initiatives, the support initiatives. Now, also very important part of the response to the crisis is the proactive seeking of financing. Okay, so Egypt, before the stresses or the pressures of the crisis began to be felt, the Egyptian authorities sought external support, whether from markets, World Bank, IMF, but from various sources, in order to be able to be prepared for the crisis. Needless to say, and Marina made a very good point on that, is that the crisis is still playing out. We don't have, there's, in fact, for Egypt, the latest GDP numbers came below expectation. This is the first time that they come below expectation. Prior to that, we were getting better than expectation outcomes. The point here is that there's some way to go before we see a recovery, and the pressures of the crisis are still being felt. Now, the question for us now is whether the reforms of the past few years can still carry the Egyptian economy through the remainder of the crisis and beyond COVID. To our minds, macro stability is absolutely necessary, and the fiscal and the policy space that was created is absolutely necessary for improving growth, but it is not sufficient. In fact, there are clear indications for Egypt over the past few years, pre-COVID, but also during COVID, that there are looming challenges associated with the growth outlook. So if we look at investment, export, and the labor market, we see these indicators. Exports and investment have not contributed much to growth in recent years. Consumption was carrying growth for the most part. In fact, net exports has been a drag on growth in Egypt. As I mentioned, overall investment in Egypt is low. And when you look at private investment, it's even more so, because at about 50% of investment in Egypt is by the public sector. And FDI has been predominantly in the oil sector, with manufacturing very important for employment, taking only a small share of foreign direct investment. On the export side, also exports are low. And in fact, if you compare Egypt to any country grouping, frankly, you will see that it is low. And we feel that a key impediment to exports in Egypt is actually the barriers to imports. For the ability of the Egyptian economy to integrate into the global value chain really depends on the ability of exporters to import products on which they can add value and then export again. So there's some reforms to be done in this area. Now, on the labor market side, clearly unemployment has been declining. But like I think Marina mentioned, these youth unemployment is still quite high, in particular female unemployment. Labor force participation quite low for Egypt. This indicates that there's a lot of discouraged workers. And the quality of jobs that exist in Egypt is kind of low, because many of the recent jobs have been created in the informal sector. The informal sector employment is 40% of total employment. This raises a lot of questions. Of course, the biggest issue on the labor market side is the demographic. The working age population in Egypt will increase by 30% over the next 20 years, 30%. And this is gonna be felt very soon, this decade. This is a great blessing if it's leveraged, not so if it is not. So bottom line is that the private sector needs to be encouraged, needs to be energized in order to invest more, export more, and create better jobs. What needs to be done, I think, is to our mind is clear. Of course, stay on the path of prudent macro policies, but also deepen structural reforms to empower the private sector. I think part of the strategy in this regard has to be clarifying the role of the state in the economy. It has to be an identification and elimination of regulatory and bureaucratic impediments to investment and activity in general. The competition framework needs to be strengthened. As I mentioned, barriers to imports need to be removed. And of course, the old question of access to land, I think more work in this area is needed. I will also end on a positive note, like Marina. I think if we look at what Egypt has been doing over even this past year, in spite of the COVID, I think we've seen Egypt make progress along many of these areas that I mentioned. What we would like and look forward to see is a deepening of these efforts and the sustaining of these efforts in the period ahead. And I'll stop here, Dr. Adel. Thank you very much for your attention.
Thank you, Dr. Said, for these comments. And also, I like the positive note at the end. Let's move to our third panelist, Dr. Elina Ribakova, who's the Deputy Chief Economist at the Institute of International Finance in Washington, D.C. Previously, she held several senior roles in the economic research at a diverse set of financial institutions like Deutsche Bank, Citigroup, and the IMF. So Dr. Elina is joining us from DC, so it's morning. So I want to thank you again for joining us this morning, and the floor is yours.
Thank you so much, Adel, and thank you so much to Marina and Said for such wonderful introductions. Makes my life so much easier. In terms of my comments, I'll probably focus more on finance, since coming from Washington, D.C. and Institute of International Finance. I do agree with a lot what was said before. And just one piece of anecdotal evidence, we recently organized a virtual trip to a few countries in sub-Saharan Africa, and I've done those trips for more than 10 years, and I have to say it was exceptionally well attended. We almost had to tell people to go away because we don't have enough seats at the virtual table. We wanted to make it interactive. And I think that tells you something. With the global high liquidity environment, return to this region, interest of this region is clear. And I think it's extremely important to be very opportunistic on the behalf of the authorities and behalf of the countries on how to use this ability to access international markets. We have looked at it before, and my colleague, by the way, just issued a report focused on sub-Saharan Africa. We haven't published one for a long time. And after struggling with the title, we came up with Exposes Pre-Existing Challenges. I think it is critical to use this opportunity of better market access to improve your profile of borrowing, to be able to borrow sort of at a longer maturity, at lower cost, and also spread out, make it less bulky. And if you look at the last peak of issuance from the market, from the region, sorry, we're talking about the external borrowing in foreign currency. The pickup is very strong in 2014-15, but then it also shows a very bulky bunching up of repayments later, further out. This is on the external market front. And on the local markets front, I think Egypt in that case is a great example where you might have certain idiosyncrasies of the market, but if you're consistent and if you are in close communication with your investor base, if you know who is involved in the market and eventually also improve transparency of your reporting, you can have a stable and I'd say constructive relationship with investors, right? Where even though it might be some of the investments are short-term into the local currency market, that still leads to a more sort of medium-term engagement with this investor base. And I think these are the sort of my two big messages. One is to be very opportunistic and in terms of profiling your borrowing and not sort of going a little bit too enthusiastic in terms of borrowing at any conditions. And the second one, in terms of developing also your local markets and relationship with your investors so that they stay with you for longer rather than all rush in at the same time and then all rush out at the same time. So on this big picture, just to talk briefly about the region, we are indeed, as Marina and Said pointed out, we're having the first recession for the region in probably 30 years or more. It's or sort of almost since we started reporting the statistics. And it is incredibly important for people to continue supporting, to have the policy room to continue supporting particularly the vulnerable. And I think that's where the pre-existing challenges come in. If you already had fiscal issues before COVID, now it is, of course, a desperate situation, and you are not capable of supporting the most vulnerable parts of the population. And I think that is critical, and we're seeing that. And part of this big issue is ability to generate revenues, especially for commodity exporters, or especially oil exporters, non-oil revenues. In many countries, we have very small share of GDP that is collected. It can be as low as 4% of non-oil revenues, for example, in Nigeria. That over time has to increase. Of course, today and tomorrow is not the right time to start increasing that, but in terms of the cleaning up your administrative capacity, in terms of your maybe indirect tax subsidies, that is something that over the medium term the authorities definitely need to start thinking about. And again, it relates to our earlier point about financing. If they're coming out to the international market, engaging with international markets, then this sort of, you might end up in a situation in which some countries are already in, where your debt to GDP stocks are not very high, but the repayment requirements as a percentage of your revenue basis are extremely high, and that leads to very quickly to, again, sustainability problems. So this is on the fiscal front. On the monetary policy front, we know that, of course, the region is extremely diverse, and it is understandable that in some cases you have more flexible exchange rate regime, in some cases you have more fixed exchange rate regimes. But I think what is important for the investors, especially international, but also domestic investors and corporates and FDI, is to have more predictable regime, where the investor has visibility that some sort of either exchange rate, parallel exchange rate systems will not change unpredictably. And also, if you have a crisis or shock period, you understand what to expect, whether you might be sort of stuck in the local market or not. I think that leaves definitely a bad taste for a long time. It might be beneficial in the very short run for the authorities, but it is definitely very difficult for the medium term. And I think in some countries in the region, we have seen that happen. And it has the most sort of the biggest damage on FDI, not even the short-term portfolio investors. So I think these are probably the key issues. I don't want to go too much into the country specifics. My colleagues here have done it so much better. I do want to flag the report, and in that report we have the coverage of Ghana, Zambia, Nigeria, Cameroon, Ethiopia, Cote d'Ivoire, Kenya, Tanzania, and Angola. And of course, my colleagues also cover Egypt very closely. And it is a pleasure to be on this panel, and I look forward to the questions.
Thank you very much. I like we're all on time, so we have enough time to open it up to discussions, to get questions from the audience. Some people have already submitted questions. Again, for the attendees, if you want to submit a question, please do so. The first question I will ask, I have a few questions, but I want to ask regarding the vaccine, the impact of the vaccine on the economies in Africa. I think I saw statistics a few days ago that only 25 vaccine shots were given across the continent so far. And while in Europe and the West, there have been millions of vaccine shots given. So what kind of impact will the vaccine have on economies at a general, from a general viewpoint? Do you think it's necessary? Will this having access to the vaccine and governments securing vaccines, will that create more confidence for investors and so on? If you can share your comments or your view regarding the vaccines impact on countries' response and recovery economically. And I don't know who would like to share some thoughts about that first.
I'll just go very quickly first. I think one of the reasons why we had slower contractions in the region might be that the virus wasn't as prevalent in some of the countries. But on the vaccine front, to me, and my colleagues here probably will know a bit more, but I think the financing for the vaccine, that is the critical moment. And in some countries, they won't be able to afford the same level of vaccination, financing that without multilateral support. And in a way, from the multilateral or international support, it is a selfish thing to do because, it is a pandemic, right? And if there are pockets of infections ongoing, it will keep on coming back to the global economy as well. So I think it's a lot about multilateral or international financing for the vaccine.
Can the World Bank or IMF play a role in this in terms of financing? Have governments tried to seek financing for this? I don't know if it's a sensitive topic or not, but...
No, I'm happy to come in, Adel. So I agree, and I'll come back to your question. I think one important demographic difference between sub-Saharan Africa and also North Africa, quite frankly, on the one hand, and many other advanced countries or developed countries in the rest of the world is the age structure, right? Okay. So the population is much younger. Which I think is a good thing when one looks at it from a COVID lens, because the health challenges don't tend to be so prominent. For a number of different reasons, we do expect the rollout of the vaccine in Africa to be somewhat slow. And actually, we see now many countries in Europe where it's slower than expected as well, right? So this is not a challenge unique to Africa. In that context, just also wanted to make the point that we do not forecast a V-shaped recovery for sub-Saharan Africa. This is one of the questions in the chat. And we expect that the pandemic will scar potential output growth for some time. So we will see a rebound. It's not going to be an L, but it's not going to be a V. It's going to be a slower rebound where it will take a couple of years to kind of get back to the growth path. Now, when it comes to the vaccine financing, and I also noticed the statement that the WHO made yesterday, that it really should be a joint responsibility globally to make sure all countries have access to vaccines. Yes, the World Bank Group does have facilities for this that are being developed and that are being considered in some countries.
Thank you. Dr. Said.
On the economies around the world, obviously, I think we still see a very high degree of uncertainty looking forward, even for, like Marina said, even for countries that have started to roll out the vaccine. There are all kinds of challenges associated with the distribution of the vaccine, but also, you know, the wave is still ongoing, and there are technical questions, medical questions that we're not experts at, that would determine the speed at which the vaccination can proceed. Obviously, countries will not move at the same pace, and it will depend a lot on available resources, but also infrastructures for distribution. Obviously, the fund, I think, like Marina said, it's a joint responsibility, global responsibility, to ensure that the vaccines are provided equally to all countries, but there are challenges in this regard. So I'll leave it at that. From the fund side, obviously our facilities are known in terms of the type of facilities that we provide for countries for budget support or for balance of payment support. So this is there's no new facilities in that space. Thank you.
All right, thank you, Dr. Said. I've received a lot of questions, so let me go with the first one I received, and it's from Minna Badreddin, who's an economist at CIB Bank here in Egypt. Her question is, I read it out loud. I think it should appear for everyone at the moment. In terms of sub-Saharan economies, do you see a strong rebound in the next 2-3 years to pre-crisis levels? My question is whether you project that their economies will have a V-shaped curve in 2022, 2023, or will growth be significantly slower and they might not witness their pre-crisis levels in the next 5 years? Countries like Kenya and Ethiopia, for example, where growth was significant before the pandemic. Does anyone want to share some thoughts about that?
I'm happy to come in briefly. It's a period of high uncertainty, as Said and Elina have also said. So it's difficult to know anything for sure. Having said that, I think, unfortunately, a V-shaped recovery would be too optimistic. I think it will take a number of years. So our Global Economic Prospect publication, which just came out, forecasts 2.7% growth for this year and 3.3% growth for next year. However, this would still set us back, especially on a per capita basis, but even on an aggregate basis. So it will take time. It will take a number of years before we are likely to get back to the output levels previously seen. Maybe also just to add that there will be some country specificity to this. For instance, oil exporters, if oil prices remain low, may see lower forecasts for some time to come. And Nigeria, for instance, is an example of that. Back over to you.
Okay, thank you. Anyone else want to share thoughts about this question, or should we move on? Okay, Dr. Elina.
Just very quickly, I agree with Marina, and I think it's very important to address especially sort of structural imbalances in Ethiopia. The growth has been very strong, but I think moving away from SOE-based economy and doing reforms to help sort of foster development of the private sector will be very important. And in case of Kenya, I think the relationship with the IMF, I know it's a very constructive relationship, and I hope it moves to the next stage. I think that's something, and of course the World Bank as well, to support their adjustments. I think that will be also critical for the near term.
Okay, thank you. Should we move to the next question? The next question I received was from Omar Auf. I think it was directed to Dr. Said. So I'll give the chance to Dr. Said to briefly maybe share a thought or two about this. And the question is, how well does the macroeconomic situation reflect the well-being of the general population here in Egypt? And if there is a discrepancy, how do we work to close this gap? I know this is a general question, but maybe a comment or two.
Thank you, Adel. I think there was also a question prior to that by Alia Mubayyid, but maybe
yes. You can answer both if you would like.
Fine.
Yeah.
I will do that. So on the second, on Omar's question, I think one of the developments that we've seen in Egypt over the past few years, again pre-COVID, is that following the accumulation of imbalances over, I would say, many years, that culminated in the request from the authorities to the IMF for an EFF back in 2016. These the reform and the adjustment program that Egypt put forward and implemented during this period, especially early on 2017, did certainly create difficulties and put a lot of burden on the population. At the same time, I think the government did a very good job at expanding the social protection programs to actually try to alleviate the impact of these policies on the population. In fact, I think we've seen an expansion in many of these programs. But also, I think it is important to note that these reforms were necessary, absolutely necessary, because had it not been for these reforms, the situation in Egypt would have been very dire, frankly. Now, moving forward, we've seen an improvement in growth, and we've seen an improvement in employment. But I think Omar is correct to say that, we still would like to see more spillover from these good, nice macro numbers to better employment figures and more widespread employment. But this is part of my discussion earlier in my opening remarks, was precisely on this point, that Egypt needs to see a higher level of inclusive growth, meaning that Egypt needs to see private sector activity increase, creation of jobs in the formal sector, because jobs in the informal sector are fine, but they're not stable, they're not sustainable. And therefore, you see that even though the numbers look good, the impact on the ground may not be as good as the numbers may suggest. So I think this is absolutely correct, Omar, and all the recommendations that we speak about regarding structural reforms are precisely aimed at, kind of improving the well-being of Egyptians more generally, not just seeing some macro numbers improve. Okay, so this is on Omar's question. Alia's question, one thing that I should say is that as the situation stands today, our expectation is that by the end of this financial year, the fiscal year in Egypt, Egypt would not need financing from the IMF. In fact, I think in the course of this year, we think that on the fiscal side, for instance, there is a lot of space to deal with the crisis. Similarly, on the monetary and the financial sector, on the fiscal side, within the approved budget, there are sufficient contingencies to allow the government to shift resources amongst different categories in case there's a need for higher spending on COVID-related programs. On the monetary side, like I said, reserves are at a comfortable level. Actually, we've seen them increase since the peak of the crisis, and increase in a very healthy manner. Egypt continues to attract financing from investors, and on the financial sector, banks are in a healthy situation. The financial sector indicators are quite sound. So, based on that, we think that Egypt does not need financing from the IMF in that sense. Now, of course, the IMF, as you know, is always ready to support and provide the framework for countries to implement the reforms that I discussed, the structural reforms that I discussed. So, the engagement post SBA will depend on what the Egyptian authorities would like to do, knowing that there is no expectation of financing needs emerging from the fund. Thank you.
Dr. Elina, you wanted to say something? Okay, go ahead.
Well, I just wanted to quickly pick up the question on the FDI to the region. And I think I just want to frame it more in the terms of global FDI to emerging markets that has come down dramatically over the last 5-10 years. And as we'll know, also globally for developing low-income countries, remittances are high, and the World Bank has done a fantastic job on that. And we have seen also during this crisis that remittances, the flow of remittances was less disturbed in countries where there's better financial access, where it's less likely that people are carrying cash and, of course, or transferring via very sort of cumbersome means. And I think that is another very important work that the World Bank is also, and of course, the IMF are focused on. But in terms of FDI, we have seen still the proportion of FDI relative to other flows is relatively high in Africa. And that's possibly because of the limited access to global financial markets rather than just very high FDI. But we also have examples of some of the Asian economists where they managed to keep up this high FDI while also accessing international markets. And I think this is the model that definitely some of the sub-Saharan Africa's countries can focus on. And here there is one issue which Marina and also Said mentioned, is the free trade agreement and increasing the inter-regional, inter-country, sort of within the region trade and connectivity, because we have seen FDI that is maybe solely focused from one of the European countries to one of the North African countries. And then it doesn't trickle down anywhere else. So there is very sort of specific relationships, while very limited relationship between the countries. And we have seen also nascent increases of FDI within the region. And I think it is as important as investment by international investors, because some of the regional investors, they know the specificities better, they understand the region better, and they are more sort of maybe they're maybe even more sticky than the international investors.
Thank you very much. I think we should go immediately to the next question, and I'll go to Shuru Abdullah's question. And it's, I think, interconnected to what Dr. Elina has mentioned. Shuru Abdullah from Chicago, her question is directed to Dr. Marina, but it's open for anyone to answer. Why is the region least integrated? What factors inhibit a unified trade integration, if not soft diplomatic effort as well? And maybe we can add to this question also how did COVID impact inter-African trade and investment? It's also an interesting thing to maybe a comment or two about this.
No, thank you. And I think I'll just underscore what Elina said, in that the region, both North Africa, but also large parts of sub-Saharan Africa. They have very much kind of a hub and spoke trade arrangements rather than kind of a global arrangement with each other. And I think that is really, it leads to much lower integration into global value chains. And by having such arrangements, one is foregoing opportunities for investment and for private sector export-driven job generation. So how does one get from the current status to a different type of trade arrangement? That's a very difficult question. I think if we knew the answer, maybe we could make progress more quickly. But I think the history and politics probably has some role to play in that. I also just wanted to take one moment to revert to Alia's question on how does one limit the fallout macroeconomically in Egypt if 2021 turns out more negatively than we all hope. And I think there's a lot of good things in place. The Takaful and Karama, the social safety net program, is there. It can be scaled up quickly. It has been scaled up when need be. So I think when it comes to poverty and managing possible increases in poverty, that's a great start. And Said referred to that as well. I think in parallel, really moving forward on this second wave of reform and making sure that the recovery kind of gets the oxygen it needs, that the private sector can really develop and grow as easily as possible, generating private sector jobs for Egypt's entrepreneurial youth. I think these reforms only take on greater urgency now than they did in the past. I think it links back to what Elina referred to as exposing pre-existing challenges. I think here some of these reforms now only have greater urgency. Thank you.
Thank you. Anyone wants to add anything, or should we move to our next question? All right, I'll move on. I think there's one question, Dr. Elina, you've indicated you wanted to answer. It's the question from Yusuf Shaheen. What are the new trends in foreign investment? Did you indicate you wanted to answer that one?
Yeah, I think we covered that quite a bit. And I think we can answer very quickly also on the follow-up on Marina's on trade. The effect of the pandemic on the African Free Trade Agreement, I think these were fantastic news, but a lot of it is in the details. So actual compliance and implementation of that free trade agreement will take time. I think the pandemic has postponed that. And if you look at the free trade agreements in Africa, it's like a spaghetti soup of overlapping and confused agreements. And of course, Egypt has a very important nod in that to also benefit from the regional free trade agreement, but I think that its implementation, and we haven't seen as much progress as we would like for natural reasons, because authorities were very busy fighting the pandemic.
All right. I have a question I received outside this forum from Yusuf, and I think this would be an opportunity maybe for Dr. Said also to mention, and it's what opportunities and risk does COVID create for Egypt in Africa? If anyone else wants to answer it, maybe Dr. Said, do you see that with everything happening in Egypt and across the continent, is there opportunities for Egypt on the African continent? And what kind of opportunities or risks? I don't know, it's open to everyone, but it was directed for Dr. Said.
Well, I mean, in terms of opportunities and risks, I think Egypt is, obviously is one of the largest economies, and its location is strategic in terms of access to different markets. Now, whether this is COVID related or not, I think the idea is that Egypt can play a bigger role in the global economy, and certainly in the region, whether it's sub-Saharan Africa or the Middle East and North Africa, again because of its location. the idea is that it needs to create the space and the environment for the private sector to be able to kind of take advantage of these different opportunities. Again, for COVID, some of the angles that people think of is, whether Egypt can be a manufacturing and a distribution center for vaccine. And again, these are ideas. I don't have a particular view myself. So I'll stop here and just put this question in the broader context that I had described earlier.
All right. Anyone else want to add anything regarding opportunities and risk? I think everyone had mentioned some of the opportunities that I think are interesting, so we can move on. From the questions that we have received, does anyone see one question they're eager, because we are not going to be able to answer all of them. So I think the panelists can see some of, okay. So Dr. Elina, you've indicated Farida's question.
It was somewhat by mistake, but I do have to say that because I was thinking about the next one. But
okay,
in terms
you can
of
go. You can answer the next one if you want.
Thank you so much. But I think in terms for Egypt, in terms of the gas development, I think it's extremely positive. It definitely improves the current account for Egypt. And also makes potentially more competitive some of the production in the region. So that's sorry, very quickly. But in terms of the next question was about when could some of the countries in the region come back to the pre-crisis growth levels? And again, as Marina said, it's highly uncertain, will take time, but also it's okay not to come back to some of the pre-crisis growth levels. We have seen obvious sort of recoveries, say, for example, in Cote d'Ivoire, post-crisis, or in other countries, just catch-up growth. If you will have more stable but lower growth, which also spills over to everybody in the country, especially the lower income parts of the population, it's okay to have lower growth numbers. We shouldn't be obsessed with this aggregate big levels. I think it's the distribution of income matters and the quality of growth matters.
All right. Anyone wants to add a comment? Yeah.
Maybe just to add that I very much agree with that. I think there is dynamics that are hidden underneath the aggregate number, and the inclusion story is very much part of that, be it poverty or gender. But I also think this is a really opportune time for us to think about how we can build back or build forward in a greener and more sustainable way. I think there's a lot of new technologies out there. There's a lot of new opportunities out there. And there's a number of countries in the region, including Egypt, that are really prioritizing this. And I think that's an incredibly welcome trend.
Maybe there are a couple of Egypt-specific questions. One on the issue of the interest rate and inflation. Obviously, I think on that question, our view of the recent cuts, the two recent cuts and the interest rate, we believe that these were in the right direction. Now, moving forward, obviously, the central bank continues to kind of look at the inflation numbers and decide it makes its decisions based on the most recent data. The sense is that part of the decline in inflation that we've seen in recent months, and when I say recent months, I'm not talking about COVID, I'm talking about since November of 2019, in fact, we've seen a kind of a trend decline in inflation. A good part of that is related to improvements on the structural side, meaning food distribution has become more efficient, and many of the bottlenecks that we've seen in the past that led to volatility in food prices have been dealt with to some extent. So, and because of this, you've seen that the central bank has revised its kind of a medium-term inflation target. So we think that it is important not to take any action that would jeopardize inflation, but at the same time, I think interest rates is about it has an external angle. There is the portfolio inflows, interest rates remaining too high would attract too much inflows and potentially could be destabilizing. Low interest rates can be also destabilizing because they may discourage inflows. So I think it's a balancing act between these different considerations. And we think what we've seen from the central bank so far seems to be in the right direction. So I'll leave that. I'll leave it at that in terms of the interest rate policy. There was a question on growth and the drivers of growth. As I mentioned, I think consumption has been the driver for growth for the past consistently for the past many years. If you look at it from the demand side, I think if you look at it from the supply side, over the past few years, the sectors that have driven growth have been oil, the investment and the activity in the oil and gas sectors, but also the recovery in tourism. It's kind of strange to say recovery in tourism today, but I'm talking about pre-COVID. In 2019, Egypt saw the best tourist year ever, I believe. So that lifted growth. Of course, these two sectors have reached their potential, and the idea is to kind of diversify further the sources of growth in Egypt. Thank you.
Thank you very much. And although we couldn't answer everyone's questions, unfortunately our time is up, and I know that our speakers, they have a very busy schedule, and I was very happy for them to be able to take 1 hour and join this webinar. So we will stop here, and I'll take this opportunity to thank all three of you, and of course our attendees, for being part of this first webinar in 2021, hosted by the Cairo Center for African Studies. I think a lot of very important comments and insights were shared, and I think for the attendees, I'm sure they learned a lot, and I think we'll let this conversation going. I don't think this is the end of this conversation. I think maybe in the future we can have another webinar and talk about some updates or how things have been developing. But again, I'd like to thank Dr. Saeed, Dr. Marina, and Dr. Elina for being part of this webinar. I really enjoyed it. A great honor for me to be part of this with you guys.
Thank you, Adel. Thank you. Great to be with you.
Thank you. Thanks to the
Thank you so much.
Thank you very much, guys. Bye-bye.
Stay safe, everyone.
Thank you.